PDD, Penduo Duo. It's the parent company of the fast fashion and fast just about everything. You can't hardly go on that site, Pete, if you go there, Temu, and not find something. Just for grins, I was on there this morning before I was preparing these notes, and I said, okay, show me a Yellowstone belt buckle. And boom, there it is. Show me a T-shirt that has Godzilla on it. Boom, there it is. I mean, they have everything on Temu, and their third quarter revenue growth was 44% year on year to $14.16 billion. Now, not everybody loves this company though, Pete, because it's Chinese online retail, and a lot of people think, well, yeah, but you know, they're ripping stuff off. It's not my statement. I said that's what people say, that they might not honor trademarks as much as some places and so forth. Well, but as good as some of their news was, Pete, the stock was under heavy pressure because revenue, even though it was up big, people weren't as impressed with Temu's numbers as I think Temu thought they might be.
And they missed the number that was expected. But John, this is another one of these circumstances where I look at it and I say, well, maybe that's a bit of a problem, but what doesn't sound like a problem to me is that they're up 44%, as you mentioned, year over year. That's an incredible number. And then when you look at the transaction services revenue up, it's only up 72%, John. I mean, I looked across this thing and I would have expected to see this stock actually moving to the upside. Instead, because of some of the lofty stuff that was out there that people were looking at, I would say this is a company that down 10% today and significantly off of where the 52-week highs are. I look at this as an opportunity as well. So I'm not trying to be all bulled up in these first couple, but I am bulled up because I look at this and I think that they absolutely crushed it. And when I say crushed it, when you put those kind of percentages up there and that's what your growth is, and you continually put stuff like this there, John, how about free cash flow at $116 billion? I mean, I just look at all these numbers and say, you know what, if they miss just because somebody was overly lofty on some of the, what they were expecting, oh, well, too bad. I still like it. And I think the fact that it's down 10% today or whatever, we have seen some unusual options come in there as well. I think this is a stock that does have a little bit of a lift potential into the future. Doesn't happen tomorrow, probably doesn't happen tomorrow, but I can see this stock being one of those that everybody is going to say, why didn't we buy it at 104? What were we thinking? Well, this is the opportunity now, I think.
Yeah, the opportunity's in front of you. And you've also got the uncertainty out of the way, Pete, because they are performing, as you said, and the fact that you might be able to pick up a stock like this several handles cheaper than you thought, not a bad deal if you've got some risk capital sitting around.
It's got a PE of 8, John. A PE, price to earnings, is 8. So somebody who wants to say, well, that's pretty expensive. Really? I don't know. If I see a PE underneath 10, I'd say it's pretty damn cheap.